Okay, morning guys. So obviously we've got NFP today. I'm not going to trade at all. In fact, I might actually wrap up after this video because I had a positive week, and it'd be a bit of a shame to give away the profits that you've just made. And it's been quite a hard week as well. So if you've made profit this week, well done. Now, what's happened with risk appetite is that we're going to potentially see a bear trap. Okay. So what's happening on DAX that they're looking to short? So we're going to probably pump on DAX, okay? USD, they've already sold against this moving average, so we can go higher. S&P, and they're sold, so we can go higher. So we're going to probably, going to rally into the weekend, okay? And now that has been reinforced by the bubbles. Okay, so this is quite an important way that you can use the sheet in the fundamental context, and so much as that the Australian dollar is like a risky currency, and we've got the safe havens over here. Now these are sell, and this is a buy. Okay, so look for Aussie strength, yen weakness, USD weakness. If we come to the AutoChartist, we can try and find something with the Aussie in, and if not, it doesn't really matter. No, and so it is going to be a nothing burger today. But if you want to manually trade, you could look for a little bit of dollar weakness and yen weakness, and that's it. Yeah, so just a very quick video just to let you know is that today is probably going to be a bear trap, and there's like 100 reasons why you'd want to short the indices. And it looks like they're going to fall for it. When I say they, I mean like the retail traders. Okay, so what will happen while I'm here, and while this video is going to be fairly short because we're not going to look at any charts, a little bit of educational material. So what should happen is that we'll have like a bearish price action in speech marks, and then that will then encourage them to sell, which is what's happened. And then as soon as they start to sell, we'll do this. Okay, and that's very common. So if you're trading and you think, oh, that candle looks bearish, it might be done on purpose in order to get you to sell, right? And we can see that we've actually got diagonal support, we've got horizontal support. So we're not that bearish, we're about the big picture, and then they're selling it. So what you want to do if you're manually trading, don't try and maybe place orders, because at least it gets you out of that sort of emotion of entering that market. Now that's the logic. So 1 is the price action, 2 is the sentiment, and 3 is the rug pull. Okay, and it's done on purpose, and it's not a coincidence. You can see how, when they sell it, that's no way a coincidence. Okay, likewise they went long. That isn't a coincidence. It can't be. So it's obviously the sentiment's very strongly tied to price action. So 1 price action, 2 sentiment, 3 rug pull. Alright, okay, short video today. Have a wonderful weekend. I'll be back for the COT data, and remember to trade safely, and I'll speak to you guys soon.